Welcome back, and the gold prices extend losses for a second straight session today as investors continue to fret about a possible early end to the Fed's QE program. Although the weak physical demand has further dented sentiment into the prices, on your screens 1275 is holding 0.25% of a gain on your screens. The Brent in the meanwhile slipped near $108 a barrel on renewed concerns about the possible tightening of monetary policy in US. This has offset support from continuing oil supply disruption in Libya. Let's also get on board then Kishore Narne. He's Associate Director, Head and Commodities at Motilal Oswal, and he joins us live as well. Kishore, hi, welcome. How are you looking at the precious metal moves right now, especially in the Indian markets where we seem to be breaching below that 30,000 mark for gold and almost around that 45,000 levels for silver as well?
I think, Manisha, we have seen quite a bit range-bound market in the recent times, especially in the precious metals complex. Though silver has been one of the metal which is more weaker, but gold has been pretty much range bound. I think we need some clarity and more clearer signals from the Fed that what is going to be its path down the line on its quantitative easing program. So I think that's what's going to be the trigger for gold. Until unless that becomes clear, we are not going to go anywhere, especially if you are looking at the global prices. In domestic markets, I think still 29,900 holds a good support, and probably around 30,200, 250 again intraday resistances. So probably one can start selling at resistances around 30,250 kind of levels for 29,900 as an intraday targets. But I think positionally or a directional trend is not very clear at this point of time in gold.
Vijay, how will you look at the silver prices, because it's a constant decline for that one as well? The international price is trading at 3-month lows, and the Indian market's just about breaching that 45,000 mark.
Absolutely right, Manisha. I've been talking about staying off the leverage space because I'm expecting both gold and silver to go down. And as far as silver is concerned, now that we've breached the 46,000 mark and even the 45,000 mark is being skirted around with, I think 44,200 odd level seems to be a fair probability, with gold probably testing even 29,600 to 29,675 odd levels in the coming few trading sessions if this trajectory was to maintain. Much will depend on the rupee dollar peg, and if the rupee was to appreciate vis-a-vis the dollar, the decline might just be a little more accelerated. So I think trying to bargain hunt here would be fairly risky, and one needs to wait and watch and see if the screen in terms of price, volume and open interest correlation talk about any kind of trader support coming in, which has been so far absent for many weeks. Unless that really happens, I think trying to bargain hunt on both these precious metals would be fraught with risk.
Fair point then. Kishore, how would you look at the energy space? Because we have seen NYMEX trading at around 5-month lows, and the Indian markets, of course, have been choppy today. The rupee also has done its trick. So we have seen a bit of a rebound coming in after that decline in the first half. How are you looking at the natural gas as well as the crude prices trading in India?
I think crude still remains much more weaker on both on fundamentals and technicals as well. I think fundamentally you can see that US glut continues to be there. At least another week or so I am expecting this inventory build-up to remain until the refineries open after the maintenance. So that WTI pressure will remain. At the same time, if you see the Middle Eastern supplies, Saudi has been pumping more and more oil into the market, and Iran coming back to the table for peace talks. Probably I think that will take off some more risk premiums from the market. So I think I would like to remain bearish on crude. Looking at domestic markets, probably intraday 5,800 to 820 kind of level should be good support. So that could be your sell side targets. With stop losses around 5,955, one can go short in crude.
Vijay, how would you look at the natural gas prices? Because this is that time of the year when you do see prices gaining up on winter demand. Do you see the turnaround coming in?
Manisha, not only natural gas, the entire hard asset space, I think there are signs of complete lack of enthusiasm. So higher levels would indicate a fresh short opportunity. I think if you go past the 228, 229 odd levels, I would venture out with very small quantities on the short side. my stop loss being 232.5 odd levels. I think there is a possibility that natural gas will come below the 224 mark.
All right, so there's bearishness in this sector as well, but the base metal space is yet another one which has seen sell coming in on all a bit of upticks there. Kishore, especially in case of copper, where we are looking or talking about more supplies in 2014 or something like a tin, which Morgan Stanley also says could be an outperformer in this sector. Between the two of you, of a short and long position, which one are you taking up?
I think copper, I still remain bearish, as though you can see some kind of a green shoots after the in Chinese economy, probably as the US also recovers. I think there could be some kind of a consumer demand up in the next year to come. But I think supply side is significantly healthy, and you have good surplus coming up in 2014 or so in copper. So I still remain bearish on copper, and though probably on the downside you can be having some kind of a restriction around 6300 kind of levels on LME, but again I fairly rule out a major rally in copper. But at the same time, on a buy side, I think nickel is looking much more better, and probably it has the capability to outperform other metals in the coming year or so, I think. So that probably in the short term you still have some more pressure on nickel. Probably 820 or even sub 800 levels are possible as a spike, but those levels are very good levels to go long term buy in nickel.
Vijay, how would you be trading at copper right now? It continues to trade below $7,000 per ton. Do you look at more weakness on charts?
I would think so, yes, Manisha. I think the entire industrial metals complex is showing signs of pressure. I've been talking about how traders are just not showing any signs of keenness to buy. There is no feeling that if you don't buy today, you will have missed the bus on the long side, and you might have to pay higher prices tomorrow. Unless that keenness comes in, unless volumes and open interest really start showing signs of a robust spike, I think any kind of a rally would be more of a short covering based short-term blip on the radar, if you want to call it that, and will get sold into. So I would not really be surprised to see copper testing the 524, 525 odd levels in the near term, and ditto with most of the other industrial metals complex. I'm just not in a hurry to buy at all.
All right, so that's the mood from the experts. More sell calls than buy calls coming in for the non-agro space there. Kishore, with that, we'll let you go. Appreciate you dropping by with your strategies. With that, let's go for another break. When we come back, we'll talk about the agro commodities and the strategies within that space.